Good morning, good afternoon, good evening, whenever you're watching this. Welcome back to the Porcupine Real Estate channel. We're happy to talk about all things real estate in New Hampshire and want to give a quick market update. Let people know where we are in winter 2023-2024. Today is January 5th, 2024. And the latest data we have from the Association of Realtors at the state level here in New Hampshire, NHAR, is through November. There's always a bit of a delay or a lag there in their statistics, but this slide you see right now shows starkly the kind of changes we've seen in activity, sales activity, closed sales over the past 5 years. You see here the numbers from 2019 up in 2020 and 21, which were really busy, heavy market years, down 2022 and down again in 2023. And everybody is feeling the pinch. If you're out there actively looking, or if you're a fellow real estate professional or a lender, you know this all too well. My name is Mark Warden, Porcupine Real Estate. We've been in business in New Hampshire for 15 years. Serving investors, buyers, sellers. We have help renters out a little bit, and we're happy to help you, particularly if you are a freedom-loving individual. That's our specialty here at Porcupine Real Estate. The biggest pinch right now is lack of inventory, and you've probably seen this in the news. If you're actively looking, you know it firsthand, and it's really frustrating for buyers out there. For home buyers, there's just not much for sale. It gets worse this time of year. I mean, the seasonality is a real thing, particularly here in New England. Things slow down around the holidays, Thanksgiving and Christmas. We've had a mild winter so far, but once the snow starts flying again in January and February, often people don't want to look at houses, don't want to list their homes for sale. But the big problem has been lack of construction. And Jason Sorens has done a lot of studies about that. With his AIER work and also his housing atlas. And he's sort of quantified how the zoning regulations in New Hampshire, the NIMBY factor, has really limited new construction. Also, the cost of labor, cost of materials is very high these days, and it's hard to pencil out. So builders are taking a great risk buying raw land and developing houses. It's not easy money for them anymore. And for customers, it's easier to buy a resale and fix it up than it is to build new. So that's what we're seeing with the inventory. And the other big factor, as you may have heard, is that there's so many people locked into these 30-year mortgages of under 4% that they don't want to leave. I mean, even if they're feeling like they don't like their house anymore, they'd rather upsize or downsize. They just don't want to walk away from that sweet mortgage rate, then have to buy a new place in the 6s or 7s. Here, this latest slide here shows the current median sales price, $450,000. It's a near record high in nominal terms for the state, and I don't see that changing much. Everybody's hoping for a price drop, but because of the lack of inventory and still strong demand, we don't see that reducing much, at least in New Hampshire. Other markets around the country are going to see some cooling of prices, particularly big metro markets that were overbuilt, like Phoenix, Las Vegas, parts of Florida, parts of Texas, Utah for sure, Idaho for sure. But I expect the prices will stay fairly high here, relatively speaking. And with the high interest rates, makes the affordability factor the worst it's been forever. This breaks down some of the sales prices by county. The statewide median is $450,000, but obviously in Rockingham County, you're going to see it quite a bit higher. Merrimack's a bit higher. It's lower in Sullivan and Coos. This gives you a feel for some of those numbers depending on where you live or where you're looking. Our friend Jason Sorens is an economist as well as a philosopher, and he's actually a researcher at AIER. He looks at a number of things related to housing, including mortgage rates. And this is just a reminder that 30-year mortgage rates aren't directly tied to the Fed rate, but just more indirectly, and they look at treasuries, 10-year bonds, longer-term treasuries. And this is a fun little tweet from Jason that you might have seen. So what's next? Where do we go from here? I think we're going to start seeing more inventory break loose. So if you are looking to purchase a home or investment property in 2024, look for a big jump in the number of listings in March and April. This happens every year. Again, it's part of the seasonality. I do expect to see more places for sale, properties for sale breaking loose in the next couple months. But there's still a lot of buyers out there, so we will continue to face competition with other home buyers. In fact, just speaking anecdotally, last week I put in an offer for some dear friends and clients of mine, $500,000 purchase price. They offered 10% over and still didn't get it. So it's still a fairly challenging, competitive market, but we have some strategies that I think will help. If you'd like to sign up for our inventory or for our investor newsletter, please send us an email at info@porcupinerealestate.com or go directly to the URL in the scrolling there, tinyurl.com/porcupinepicks. What we do is select some very interesting properties that might work out great for either a short-term rental play or for a long-term lease investment property. Any other questions, visit our website, porcupinerealestate.com. Thank you for viewing and look forward to talking with you again soon.